In this segment, we'll be looking at the accounting system. I know you guys, I'm not sure if I know anything about accounting, but actually I do. The class takes a little bit of a turn after we come back and after you take the quiz one. In the other part, the middle segment, you were looking at the video about the Toyota Supplier Support Center, which is a video that I've done the voiceover in. And I have to apologize to you. Doing those voiceovers is a technology that's a little bit beyond what I have. So the quality of the voiceover is not that great, but it is good enough for you to learn from it. I hope that you look at the video again, not my video, but the video, do the video with my voiceover just one time, make some notes. When you look back, look at the video that's posted on the main course web page, the main page, not the course syllabus, and you'll see the video with no annotations or no notes, and it'll be smoother. And it'll make sense as you see it the second time. You'll see the pieces again that I'm focusing on. So today I'm going to introduce sort of the accounting cycle in a way, in manufacturing, which you haven't seen before. You will recognize large pieces of it, but we're going to go barreling down the center part. But today we're doing it in a little bit of a non-technical way. I'm showing it to you as a system. Remember, in this class we're mainly interested in systems, how to get them to function correctly so that the system can produce the answer that we want. And so I'm going to outline for you the flows, the cash-to-cash cycle that we're going to see in manufacturing. It's not as technical as sometimes a cash-to-cash cycle in an audit class, but it will demonstrate for all of us the flows that are involved when producing goods or services. So here we go. First we need a whiteboard because we always need a whiteboard. So we're going to approach this in a couple of different ways. When you look in your book in chapter 4, it is journal entry heavy, and we're going to be doing journal entries. No journal entries today. In the next video sequence after quiz 1, you'll see we will do journal entries. I would say every day for the rest of the term. Maybe not every day, but most of the days we will be doing journal entries after that. So first step here is we're going to be blocking this off into conceptual areas. The first area is cash and accounts receivable. The difference between those two is not too important to us now. Okay? Because we're looking inside the factory, we're mainly concerned with the idea that we have cash or accounts receivable. So we're not doing receivables management, no treasury function ideas right now. Our primary interest is actually what's inside this line, okay? Not including cash or something very special over here, which we'll also not include. So I'm leaving room over here at the end to add another piece that we're connected to but not focused on. Now, in manufacturing, and this really should be the way we should do everything, okay? The whole idea of differentiating between services and manufacturing is bogus. We never should have done it. It's a bad idea. It means that accounting for services is inferior and inept and just sort of a waste of time. But we didn't realize that for a long time, because without this process view, that's not a clear statement. If you don't see things as a process, you might think that services are different. But, we know now that they're not. We also know that when we manufacture stuff, what we're doing is we're manufacturing a service. So within the last 15 years or so, that's a knowledge change that's titanic. It's come from two different places. One is in marketing, in the academic and professional marketing literature, what they've realized is that there's really no such thing as a product. Everything is a service. Everything, in terms of how you approach it. So the reason people buy these dry erase markers isn't because they like little pieces of plastic. What they're buying, if you buy a dry erase marker, is you're buying the service of being able to write somewhere. Why do people buy cars? They want the service of mobility in some cases, or in most cases mobility, but also everything has multiple services. People also buy cars because they're cool and they give, you can some. That's in advanced marketing literature, everything is an act of consumption. If I buy a car that I think is cool because I want people to see me in it, or I want people to know that I know what a cool car is, that's a consumption activity. I'm consuming the coolness of that car. Or how you dress, how you cut your hair, whatever you do is a multi-layer consumption activity. And that includes products. So one of the awarenesses that the marketing people have had is everything is a service. At the same time, in an unrelated sort of growth activity, in manufacturing, we've come to the realization that everything is manufacturing. And because we've taken our ideas and we've moved them out into administration, into hospitals, into the banking industry, into product design. Every place you look, every single place in our economy has transformed in the last 15 years to look more like manufacturing. Now, it was always that way, but we always isolated it and we kept it apart. But everything that you learned in chapter 3, those advanced techniques, every single one of those is used today in every industry component, in food production, in restaurants, in hospitals, in surgical wards, in product design facilities, in banks, in insurance companies, in investment banking. Once people have the realization that we work as a team in a linear fashion and we actually transform things, then everything we do starts to be reorganized, and we're in the middle of that right now. And then we also realized that, I don't know what I'm pointing to because I didn't write it on the board, but pretend I wrote it on the board, that everything is a service. We also realized that what we produce is a service. So those objects that come out are actually objects that people buy because they provide a service. It's not because of their nature as objects. So these things have come together and changed everything in the last 15 years or so. Now, what we're doing here is we're looking at the modeling. So this kind of modeling we developed from manufacturing, but it should be applied to everything, even though old-fashioned, more, the old gray-haired white guys, they still think services are different. They account for them differently, and that's one reason that their accounting systems are not very helpful for service businesses, because service businesses really are manufacturing, all of them, and we should be doing this type of accounting. So this is the type of accounting where we follow things through. Okay. Now the first column it has a concept. Okay. So I'm taking the time to do this because I'm talking about the conceptual foundations of what we're trying to do. The first set of things we do is we record the acquisition of resources, okay? And that is the entire column, is acquisition of resources. Okay? And what do we acquire? At a minimum, the following. So in this model, we're doing the minimum specification modeling, which is what we do in this textbook, but you could imagine you can expand this. Okay, what we're going to buy is raw material. We're going to buy labor. And we're going to buy overhead. We pay for them because we want to use the services. So for most of you, it's going to be easy to see this as an asset, raw material, when we buy raw material. Labor is also an asset in an instantaneous fashion. We buy it so that we can deploy it. And if we don't use it in a sharp way, it's wasted. But when we buy it, when the person is there working, we have access to their work product. So that would be an asset. And overhead is surely an asset. This is money that we spend to acquire the right to do something, and rights we know are asset. When you pay property taxes, that is an overhead resource. You pay property taxes so that you have the right to do business in that area, in that city, regional municipality, province, whatever. When you pay maintenance on a truck, pay a maintenance fee on a truck, what you're doing is you're paying money to keep the truck working so that you have the right to the work product of the truck. So these are all resource acquisition journal entries. Then we have the actual factory itself, which is actually this one account. This is, and it's in chapter 4, it's the beginning stages. So later on it becomes, mother of many accounts, but they all have the prefix WIP. Okay, so if you have different jobs, it would be WIP job 12, WIP job 13. So this can expand to be many T accounts, but they all are WIP T accounts. And everybody has a T account. If you have an organization that has a project that is not finished one day and you have to do the project on the next day, you have work in process. If you're an audit firm and the audit is ever, do you ever start and finish an audit on one day? No, that means that audit is work in process. And the accounting that they do in large professional firms, engineering firms or accounting firms, they have a work in process account. But it's the same in hospitals. It's the same in any government agency. If you have a document to plan a project that isn't complete at the end of the day, you have work in process and you have invested time, labor, and overhead in it. Typically, if it's what we think of as a service, like a hospital or as a government agency, you don't have much raw material embedded, but you have a lot of labor and you have a lot of overhead embedded in the process. So this is resource acquisition. This is resource use. Okay. And then we have to complete the resource and stockpile it. So this is our finished goods over here. Oops, I shouldn't say finished goods because that's also the account title. Let me write the account title. Finished goods. This shows that we have completed a process, but the customer is not paid yet. So this shows completion. Okay. Then we also show the record of the time that we gave it to our customer. And this could be a customer that's outside, or this could be in an internal process, giving it to the next division, the next office, curing the patient at the hospital and having them leave. This is the transfer of our work product to the customer, is the last one, and I should have had a little bit better space management here. Cost of goods sold. Okay? This is a process. We take cash or accounts receivable. Remember, for us, for right now, chapter 4, actually for this book, for this class, cash and accounts receivable are the same. It just means this is what we use to acquire things. So we are going to take cash and accounts receivable. We're going to use that, and I'll just do cash right now. I'll forget about accounts receivable. We use cash to actually generate journal entries to acquire raw materials, labor, and overhead rights. Okay? Then at some point, when we're working on things, we say, okay, we use the raw material, the labor, and the overhead to start a project or to start a product. Okay? So notice right now we have a minimum of 3 journal entries here for resource acquisition. It's more actually when you get into chapter 4, but right now I'm just doing the mental or conceptual model. And we have 3 journal entries to show that we're taking our resources and we're putting them into production. So these are transfers into the productive facility or into the factory. We have 1 journal entry to transfer the finished goods showing completion, and we have 1 journal entry transferring to cost of goods sold showing we've given it to the customer. So this is now our external transfer. We close the loop at the same time with this journal entry here. Notice it's outside the factory. So this and this are parallel, these 2 journal entries. This is sales or revenue. And this is actually a connection back to cash or accounts receivable. So this is a giant cash to cash cycle that we're working on here. We take cash, acquire resources. We take the resources, we put them in and work on them. At the end of working on them, they're now held as finished goods. They're held until the customer receives them and probably pays for them. Once that's happened, this is our record. Cost of goods sold is the record of work that we have given to the customer in the past year. And at the same time you do this entry, you do this entry. So there's 2 entries that happen simultaneously. The transfer to the customer of the costs, and then the receipt from the customer of the revenue. Couple of warnings here. This is an expense account. It's one of the few, almost the only expense account that does not have the word expense in it. Why? It's old. It has been around for, a long, long time. It was one of the first expense accounts, and it was created before we had the idea of the word expense. You may not realize this, but the technical definition of the word expense that you are learning is very new. It was after World War II that we solidified on the definition, like a working, solid definition of the concept of expense was late 1950s. When I say after World War II, I mean like 10 years after World War II. So sort of 1957, 58, we started carefully defining all of the accounting words that you know. All of them, expense, revenue, asset, liabilities, owner's equity. Prior to about 1957 or 58, there were no precise definitions of all of those concepts. People were working on it. There was a lot of variety in this and a lot of different opinions about what was, about the definitions of each one. And I forgot, we have the definitions of revenue and expense, but also gains and losses. The concept of gains and losses was defined at the same time we defined revenues and expenses. But this cost of goods sold, we knew what that was before, and it had an old name. So this is one of the very few things that you find out there that this is, in most places, the official name, but it doesn't have the word expense in there. As an accountant, you have to know this is an expense account, okay? And so this is an asset account, however. And you often think that services don't have finished goods. They all have finished goods because, when you finish an audit and the partner signs off, is it instantaneously delivered to the customer, or is it going to be delivered to the customer a week later when the partner has a meeting? It's going to be a week later when the partner has a meeting, or 7 days, whatever. It is never going to be delivered to the customer at the signature of the partner. So there's always the delay there, and that is finished goods. And if you look at the accounting systems that professional firms use, like accounting firms, they may not use the word finished goods, but they will keep this as project completion and held. So it's often called completed project or completed audit. What it is, it's a finished goods account. So this then is the model. This is the simple version. You need to write this down on your own a couple of times, study the flow. One thing I could do in this level, which I won't do, you'll see this model again. I could put arrows here to reinforce this. Yeah. You need to start thinking of this as a flow, not as individual entries, right? In the past, and through most of your accounting life, you mostly think of journal entries as discrete things. However, we're trying to break that now and go into the concept of accounting as a system of flows. And so this is the flow that we need to manage. Is it ever this simple? No. But when you start thinking of it as a flow for the first time, you need a little bit more simple model to work with it. Even in chapter 4, this entry becomes more difficult because in the system of accounting we're using in this class, and in this class, remember, we are an M-level organization. In this class, we're using the accounting system. It's in our book. So this is our company accounting manual. So our company accounting practices manual is this book. So on an exam, you can't deviate from this book. It doesn't matter what you did in the past. It doesn't matter what any professor did. Doesn't matter you're M. This is your company. This is your accounting manual. Everything you do must be exactly the way it's presented in this book. That's part of the learning about the M cycle, is learning to discipline yourself. So M means self-discipline. And this is an experience at going through that. So in the system we're using, we don't have one account for labor. We have 2 accounts for labor. I'm not going to go into what they are right now, but in the system of accounting that we use, this is not one journal entry, it's 2 journal entries because we have 2 different accounts that serve a different purpose. Also, this entry is not based. This is one that's going to bedevil you for the rest of your career and life, this entry is the most difficult, out of control, important, and stupid, and ridiculous, and full of intelligence. You know, this is the most difficult entry in all of accounting in terms of our recording system, because this is based on a guess. This journal entry is not based on anything actual. This is based on forecasts, guesses, things like that. This is the predetermined overhead rate, or this is the overhead rate, which in this class we're going to call POR, predetermined overhead rate. So notice our system actually has creakiness. It doesn't work perfectly. That's a huge part of what you're learning in this semester, is not to run this system. It's to learn how to run a system that does not ever behave or perform perfectly. These accounting systems are human creations. There are things that we're trying to do because we have goals that really nobody's ever figured out how to do that. And the nexus in this class is this, or in chapter 4 and 5, is this journal entry. This journal entry is the only one that is not based on an external trigger or an obvious trigger. So that means this one is based on a budget, forecast, something like that, which means that it will always be wrong. And that is where you get that idea. You may have heard this and sort of remember it in a way. Over or under applied overhead is based on this. This is a really tricky concept. It's very important to do the best job you can. It will never be perfect. And go to any company in the world, from Japan to Sweden to wherever, they all struggle with this because it can't ever be perfect. It's always a fight because, you know, we're humans and we're not that good at forecasting and budgeting. So that means that there's always going to be tension here. And tensions are magnified also when forecasts get weaker. And what happens? Well, let's see, what could happen that could cause a forecast to get weaker? Pandemic. Change in technology from internal combustion engines to electricity. Social movements that cause changes in hiring practices or hiring desires or working practices, like Black Lives Matter or gender equality, or, you know, just like the list of things that can cause a problem here is infinite. So this is never going to be a stable or in control aspect of what we do. Some things here can be stable and in control. You know, these journal entries, for the most part, you know, are pretty stable. This one, also pretty stable. That one. This one, though, never. And so this is one of the biggest places we need to develop expertise in a place that's tricky and hard to come to grips with. And it gets trickier in chapter 5 and then trickier in chapter 7, because what we do is we try and add reality, like, you know, from chapter 4, which is like the intro chapter, we make it a little bit more realistic in 5, and then more realistic, and most of the place that we add realism is somewhere associated with this, okay? So this is going to get to be ugly. What do you need to do? What's your first step in getting your brain ready? Thinking of it like this. When we come back after quiz 1, I'm gonna have this same thing on the board again, on my whiteboard, except I'm going to put the additional information we need. In our book, in the accounting manual for our company, which you're starting to learn in chapter 4, each of these journal entries has a number and a purpose, and you need to know the number and the purpose for every one of them. On an exam, remember, not this first quiz, because even though we're talking about this before the first quiz, this material I'm talking about today is not included on the quiz, right? It's chapter 4 material. After the first quiz on the exam, I can give you some data, and I'll just say, you know, do journal entry 5 and 7. That's it. Or I can have an essay question saying, define the purpose of journal entry 5 and 7 and describe weaknesses that a professional accountant might have. You have to know what journal entry 5 and 7 is, based on the fact that this is our company, we're M, and they never change. Journal entry 5 always has the same purpose, has the same look. Journal entry 7 always has the same purpose, has the same look, and it always comes within the same sequence of this set of processes we have. So this is a big step. several big steps actually. And one is stopping your thinking about accounting as a series of discrete pieces where certain things lead to certain journal entries, and starting to think about this, which is it's a flow, and starting to see all parts of the flow at once. This will come in handy in a different way in auditing. Typically in your auditing class, you're not going to use manufacturing. You will be looking at different cash-to-cash cycles, but like I said, in your auditing class, they usually don't have you do a cash-to-cash cycle through manufacturing because they're focusing on the auditing thinking and approach. And if they do this, they're adding a lot of complexity from manufacturing. They could do this, right? You could do your auditing class like this, but what they try and do is they want to do the cash through revenue cycle, but in a way that this is not here because they want to focus on the auditing aspect, not have you learn this. So this concept of starting to think of these cash-to-cash cycles, you will see in auditing class and your management accounting class. We use them in slightly different ways, but we start that process. It's very important also in your audit class and in your auditing life. And even if you're not, most of you will not be auditors for public accounting. You will not be financial statement auditors, most of you, okay? That will be a minority. Now, a fair number of you, more than half of you will have some experience doing that on the way, but your experience could be quite limited. For instance, if you're in a CPA firm, they might want you to have, 300 audit hours or something. There's a desire that you know something about this, but way fewer than half of you are going to be professional auditors for financial statements and public accounting. But a lot of you will, in effect, be auditors under different titles, including internal audit functions, but also different types of accounting forensic examinations. So as an accountant, many of you, probably more than half, will have some part of your career, a fraction of your career, to audit type activities, even if, quote, you're not the official financial statement auditor. And so this cash-to-cash cycle type of thinking is essential to us going forward. In this semester, you're coming across it in two different places. I don't remember exactly in your auditing class when in the semester you start dealing with this. It may be a little bit later, but that cash-to-cash cycle is an important part of your thinking as an accountant, whether you ever even become a CPA or not, right? So this is a core part of what we do. Anyway, that's the introduction. So introduction to chapter 4, I want to get you set up, look at the metaphor. I want you to study this way for a little while and see if you can duplicate it and see if you can mock up some journal entries. I've shown you, look, credit, debit, credit, debit, credit, debit. Put a number on there and think through that. Say, what does that mean? So this is a credit, that's a debit. The way we would normally write this is like this. RM 100, cash 100. Okay? Even though on this model going this direction, we often talk about the credit first and then the debit second. This is the way it would look. So think about this as a model. Think about the flows. See if you can, on a piece of paper, just scratch in here, what this journal entry, what each one of these journal entries would look like. Give an approximate title. It doesn't matter if you're not correct when you get to actually chapter 4, but you can prepare your brain for chapter 4 by going through this. Do you have time to do this before now and next week? Sure, not a lot of time. You've got some crazy stuff going on. You have the, couple of, you have projects, you have midterm exams. But remember, you can't study effectively for more than about 45 minutes to an hour. If you go beyond that, you're faking yourself out. It's not working. Okay? It's a fake. So somehow you need to come up with a schedule that has you alternate back and forth, changing up, doing things. Go for a run, go for a walk. Do not go to the gym. It takes too long. Gyms are stupid. It takes you 30 minutes. Before you hit your first exercise set, you've already 30 minutes into getting there, getting dressed. Blah. Then you do whatever your exercises are. Then you got 30 minutes to get home. Just from your house, be out that door. Just change, be out the door in 5 minutes. Go for a hard run for 15, 20, 30 minutes. Come back, quick shower. You know, notice you want to only do prep of 5 minutes, and then when you come back, have only prep of 5 or 10 minutes before you're back in gear. And remember, you will get more points on that quiz, on the midterm, from the run than from the studying. Because when you come back from the run, your brain will be fresh and you will be smarter. So break up your day as much as you can, back and forth, and your day probably and continue in terms of breaking it up and changing your thought process. Spending 30 minutes on this somewhere in that mix is probably a really sharp idea, a really sharp thing to do. Okay, I know doesn't seem like it seems like a distraction, but actually selectively distracting your brain, you know, from during the day on a schedule is very productive. It makes studying much more effective when you come back and you just do a really solid 40 minutes than you do, you know, 40 minutes on auditing, 40 minutes, you know, when you rotate around. So anyway, introduction to chapter 4. We are going to be doing stuff like this, and we are going to be hyper-technical, hyper-focused, and we are going to be completely committed to our company's accounting practice manual, which we're starting to learn, and that is chapter 4, is the first step of it. Okay? That is all I have really for today. Next thing you look at should be, you know, there's homework and stuff to be studying interposed. You have the spreadsheet revision that has to be turned in by this week. The date's online. And then you have quiz 1 on Monday. Following that, we'll go into this again, but in a much more technical way. So this is the firm intro. And that would be all for now. Bye-bye.